And where do we target? Asian high. Can you understand setup? Can you
Yeah.
understand the setup? Okay, so what happens? Look at this. Patiently wait. Okay, it's about patience. Comes down, patiently wait. Time is right. Okay, a little too late, but what happened? Ah, okay, 30 minutes later. Okay, but like I told you, like it's not gonna be perfect all the time. Okay, so don't expect perfectness all the time. But you see what happened, right? There it goes, and then
Yeah.
there it goes. Can you see it? Same exact thing. Asia and boom, this. You saw that, right? Okay, you saw this. So, yeah, let's look at one more example and then get into the charts. Okay, let's get there. Okay. Look at this one. One obvious thing, Asian highs liquidity, right? Equal highs. Very obviously, you can see that
Yeah.
very clearly. Okay, Asian highs liquidity. Asian low is not strong as well, so we can expect that to get taken out too, right?
Yeah.
But there's an issue this day because there is nothing on the left we can refer to. See that? Nothing. Like, are you going to go to the monthly and then look for a point of interest that was created decades ago and then look for a trade? No. Okay, because you don't see there's even a dinosaur in here, though. That's how old the price action is. Okay, so you don't have to do that. Okay, so what I did was once again, don't worry, don't worry. Okay, don't worry. I'll show you how I took the trade because Euro USD, not Euro USD, GBP USD was creating all time lows after that Queen's death or something. So something happened. So 11:30, 12:30. Okay. I mark out the timing. Now today, what am I gonna wait for? For a confirmation entry. Because I can't directly buy it, right?
Yeah.
Can't directly buy it, so I'm waiting now. Okay. Patience. Okay. Time is right. Let's see what price is gone. Because am I gonna sell it from inside of this? No, equal highs.
No.
Not gonna sell it here. Okay, only buys until the equal highs are taken out. So let's see. Okay, there it comes down. Manipulated the Asian low. But can I buy it here? No, right? Like who knows if it
No.
wants to come somewhere on here? I do not know. So I'll
Yeah.
wait. Okay, I'll wait. Okay, there we get the break. Can you see that? Right at
Yeah.
London Open, it created a strong low. So we get the breakout structure right here. Okay, what do we do when a lower time frame strong low is created? We go into the higher time frames.
Higher time frame.
Go to the H1. On the H1, we have two POIs. What's that? Order block, breaker block in the same place, and a support.
Support.
Or else resistance broken turns into support, and just the support. Okay, we have that. Let's go into the lower time frames. What do you do when you have two POIs? Are you going to buy it from both of them? No, I told you, right? Same exact thing again. Top one, wait for a reaction. Bottom one, you go for it. Okay, you go for it. So let's
Yeah.
wait now. Like I'm setting my limit already here because that is where I buy it directly. Stop loss below the strong low. Targeting equal highs. Makes
Asia.
sense, right? Yeah, equal highs. So we're targeting that like this. So let's wait. There it comes down. Can you see that? It came down, but do I have any reason to enter here? No, right?
No.
Because no reaction. So patiently wait. Now, can you see what they're doing though? Can you see what they're doing? They're making up this setup for us.
Yeah.
So,
Building liquidity.
yeah. Okay, so there we go. A swing low, feeding liquidity. Don't worry, okay, because we clearly have a breakout structure. See that? We clearly have a bullish breakout structure in here. We clearly have a bullish breakout structure. Not just a random breakout structure. It happened right at London Open after the manipulation of the Asian low. Because I told you at this time of the day is when the high or the low of the day is set, right? So we can say that this is already the low of the day, right? Because it is strong as well. So what happened? Look at this. There it comes. Yeah, you know what happens when this setup is present, right? So it comes. Okay, so it comes and then what happens? Not yet. Patiently wait, and there it goes. Can you see that? Right into the Asian highs. Okay, right into the Asian highs. This same exact setup. I showed this to you
Yeah.
so many times, right? Same exact setup. Sells for buys, I showed you the same exact setup again and again. Okay, so something like this. Can you understand this about the Asian setup? You saw what to do
Yeah.
when there is news. You saw what to do when there
Yeah.
is no news. You saw what to do when Asia is strong. You saw that, right?
Yeah.
Because those are the only three stuff that could happen, right? Those are the only three stuff that could happen. Okay, so now you know how to deal with all of those situations. Okay, so now let's talk about ranges. Okay, so now let's add ranges into the equation and then let's combine all of this, Asia and ranges. Okay, so let's see that.
Oh.
Now you understand this, right? I hope this one was
Yeah.
clear
Yeah.
about Asia. Okay, so yeah, That's about that. Like, see, even in here, it's the same thing that happened. What happened? Asia. Okay, Asia. What is this? False run. Oh, melted. Timing. Look at the timing. I told you, 11:30, 12:30. What do you think we had above Asia this day? 4 hour, if I remember. Yeah, rejection block right above the Asian high. Okay, so what happened? Another sell. See, can you see the consistency? Every day you have setups. Every single day. Look at this. Look at this. Asia, false run in the opposite direction. At this time of the day, what happened? Tapped right into the 4 hour rejection block. There comes the drop. Okay, so you understand that setup, right? I hope it
Yeah.
was clear. Okay, so on Euro USD, it works like magic for some reason. Okay, you have setups almost every single day. Okay, with this. Okay, so yeah, now let's talk about trading ranges. Okay, let's talk about trading ranges. Okay. So remember, a range always, yeah, now this is important. Okay, ranges are pretty important. Okay, ranges are very important. So yeah, let's talk about ranges. Remember, a range will always start from a strong high or as a strong low. You know that, right? It always starts from a
Yeah.
bullish QM or as a bearish QM. Okay, just do not call it QMs or whatever, just call it strong highs and lows. Okay, so let's see. Now let's say for this example's sake, something like this. Okay. Now what is this? This is a strong low, right? Why? Because liquidity was taken out and structure was broken. Minor structure broken, major structure is broken as well. Can you see that?
Yeah.
Major structure is broken as well. Then this turns into what? This will turn into a strong low, right?
Yeah.
And yeah, now for this example, let's say this is the low and then this is the high. Okay, I'll tell you how to confirm the high and the low both. But yeah, for now, let's say this is the high and the low. So if this is the high, low and the high of the range, what is the reason for a pullback? You know that, right? That is to take out the internal range liquidity, right? So
Yeah.
what is the internal range liquidity? It will be the swing lows that are resting inside of this range. Can you understand that? The swing lows
Yeah.
that are resting inside of this range. So let me just try it out something like this. But now there's a problem because not every time they clear out all the swing lows and then go up, right? Because sometimes it does this. Okay, fine. Sometimes it does this. Sometimes it does this, right? Sometimes it even does this. You have no idea what happened.
Yeah.
Okay, so because if it is that easy, if it is doing this all the time, then imagine how many millionaires we'll have by now, right? So it's not that
Yeah.
easy. Like, have you ever seen the market move in this way? No, it won't. Okay, it
No.
will not happen that way. Okay, so what we are gonna do is this. Remember this very well. Okay, within a lower time frame trading range, always make sure to look for the higher time frame point of interest. Okay, for example, I'll show you examples. Don't worry. For example, now let's say this was a 4 hour range. Okay, let's say this was a 4 hour range. And then inside, like within a 4 hour range, let's say we had a daily order block or something in here. Could happen, right? Let's say maybe we had a daily
Yeah.
support or something in here. And then let's say the market started pulling back down, got into these areas, and this happened. What happened? A bullish breakout structure. Okay, a bullish breakout structure.
Yeah.
Now, how do we know what the major trend is doing? I told you, in order to know what the major trend is doing, you have to always focus on the major breakout structure. Okay, because remember,
Yeah.
breakout is the direction. Okay, whichever way the market breaks out, that will be the direction. So then you will know if we are in a pullback or if we are in a range expansion. Okay, so for right now, what is the major breakout structure we have here? Bullish, right? It is bullish.
Yeah.
And now this was the counter trend, right? This thing right here was the counter trend. This came into
Yeah.
a high time frame point of interest, and once again the counter trend turned bullish. Can you see that? So when the
Yeah.
counter trend and the major trend is doing the same thing, that is when we know that the range expansion has begun. Okay, when the counter trend and the major trend, when it is doing the same thing, we call it the range expansion. So when the range expansion starts, you're not gonna go against the trend. Can you understand that?
Yeah.
You're not gonna go against the trend anymore. Okay, so now you're not gonna say, oh, there's still some internal range liquidity here, there's still some internal range liquidity here, so let me set it here. What if you try to set it there? Yeah, you're gonna get stopped out because why? Range expansion has started, so they're gonna move out of the external range liquidity. Can you
Yeah.
understand that? Okay, so this is why sometimes pullbacks come here, sometimes pullbacks come here, sometimes pullbacks come here, because if it comes into a higher time frame zone, And if the counter trend breaks, there's nothing else you could do. You just have to follow the direction. Can you understand that? Okay, so always make sure to look for a higher time frame point of interest within a lower time frame trading range. I'll tell you which time frame to use for ranges and all of that. Okay, so was that clear? I hope it's clear. Okay, so yeah.
Yeah.
Now, how do we confirm ranges? So let's say the market started moving down and it turned bullish. Now, what do you know? Major trend bullish, counter trend bullish. What is it? The range expansion, right? The range expansion.
Yeah.
So then we know that our next target is here. But remember, as soon as it turns bullish, you can't confirm this as the low of the next trade in range. That is wrong. Okay, because for you to confirm this as the low of the next trade in range, it has to break out of the previous range first, like this. Can you understand that? Only once
Yeah.
you get a breakout of this range, this will be the low of the next range. Okay, this will be the low of the next range. How do we know the low has created the high of the range? The counter trend has to turn bearish. Can you understand that? Now the major trend is
Yeah.
bullish, but the counter trend is bearish. Is it the range expansion? No, it is a retracement. That is when we know the retracement
It
has been.
apply on all
Okay.
the time frames
Now it's
or
like
just
this. Okay,
4 hour?
yeah, I'll tell you. Now it's like this. Now, these breaks and all of this depends on the time frame you're looking at. Now, remember, we're not going to mark out ranges on 15 minute, 30 minute, or 1 hour. We're going to mark out ranges on the daily and the 4 hour. Okay, because remember,
Okay.
ranges are only used to determine the direction. Remember that very well. Okay, ranges are
Yeah.
used to determine the direction only, not for entries. Okay, for entries is when we have Asia and London. Can you understand that? For entries, we use
Yeah.
Asia and London, but ranges will be used to identify the higher time frame direction, the major direction of the market. Okay, so now let's say this right here was a daily, like you're looking at a daily trading range. This break and this break must happen on the same time frame. Can you understand that? This break
Yeah.
and this break has to happen on the daily time frame itself. Okay, because you can't just see a lower time frame like a 4 hour breakout structure and then say the daily trading range is confirmed. That is wrong. Daily has to break structure. Only then you know that the daily trading range is formed. I'll show you examples. Can you understand that? Okay, only then you know
Yeah.
the range expansion has yeah, retracement or expansion has started. Now let's say it started coming down and it turned bullish. Now remember, what did I tell you? I told you this should happen on the same time frame, right? This should happen on
Yeah.
the same time. This counter trend break, this could happen on the same time frame or else one time frame lower. One time frame lower. Okay, so now I'm simplifying the time frames for you. Okay, so this could happen on the same time frame or else one time frame lower. So for example, if you are looking at a daily range, if you're looking at the daily time frame for ranges, this break must happen on the daily itself. But this could happen on the daily or else on the 4 hour. Can you understand it? Or else on the 4 hour.
Yeah.
Okay. So now in simple terms, now ICT tells this to you in one because ICT trade support and resistance. Okay, but he has named it, given it different names. Okay, so ICT
Yeah.
tells you like when the market is bullish, okay, when the market is bullish, expect support to hold and resistance to be broken. So what is the resistance? We expect these to break, but we
Lower high.
expect these to hold. Can you understand that? Okay. When the
Yeah.
market is like, I'll tell it to you this way. When the market is bullish, do not look for strong highs. Look for strong lows only. Can you understand that? Only look for
Yeah.
strong lows. Okay. When the market is bullish, do not look for strong highs. Look for strong lows. Okay. Because strong highs are not going to hold in a bullish market. It will go through it. The resistance will be broken. Okay. So then now, this is when Asia comes into play. Okay, this is when Asia comes into play. After this breakout structure, what do you know? Daily bullish, counter trends bullish. It is the range expansion. So you know where the market is going to go next. Where? Into the external range liquidity. Can you understand that? So this is when
Yeah.
Asia comes into play. With every London Open, this is what we are expecting. Asia, London. Asia, London. Or as if Asia creates a strong low, what do? 4 hour time frame, London. This is when Asia comes into play. So intraday to swing, okay, we buy it here, close it out at the Asian high, leave the rest here. Buy it here, close it out at the Asian high, leave the rest here. Buy it here, close it out here. Can you understand that? Okay, so
Yeah.
Asia and ranges combined. I'll show you. I'll show you. Okay, so can you understand about the ranges? Do you have any question regarding this? No? I'll show you
No.
examples. Okay, so yeah, something like this is what happens. Okay, so and then I'll show you examples. Okay, I'll show you examples as well for everything I'm talking about right now. Okay. Same thing in a bearish market. Okay, same thing is what happens in a bearish market. What is the major breakout structure we have here? Bearish. Counter trend is also
Bearish.
bearish. So are you going to look for strong lows? No, you're going to look for strong highs. Okay, you're not going to mark out
Yeah.
POIs from here. You're going to mark out POIs from here because they are not going to hold. They are the ones that are going to hold. Can you understand? Because the market is bearish. So then how do we confirm a range? Let's say the market started coming down. And once you get a body closing below the previous range, then this turns into the high of the next range. Can you understand that? That turns into the high of
Yeah.
the next range. How do we know the high has created the low of the range? You have to get a bullish breakout on the same time frame. Once you get a bullish breakout on the same time frame, there we get the confirmation of the range. Okay. Then, yeah, let's say the market started moving up and it turned bearish. Now, what do you know? Major structure bearish, counter trend bearish. Where's your next target? External range liquidity, right? That is when we know. Once
Yeah.
we get this break, this is when we know that the retracement is over. Okay. Now, are you going to say, oh, stop hunt, breakout structure, let me buy it here? No, you're not going to do that anymore. Okay. So once again, this is when Asia comes into play. Now you know that the range expansion has begun. So with every London Open, you're expecting the market to drop maybe like this. Asia, sell. Asia, sell. Or
Sell.
maybe if Asia creates a strong high, I told you, a retracement into the 4-hour time frame, sell. If there is news, another sell. Maybe something like that. You're only selling it. When the range expansion begins, what you're doing is you're selling it. Okay. You will be selling it. Okay. So this is how we determine ranges. Can you understand that? Let me know. Right. So now,
Yeah.
have I answered your questions? The ones you wrote down, the ones you told me that you wrote down.
Yeah. Yeah.
Pretty much most
It
of
all
them, right?
cleared about the ranges.
Yeah, that's why I told you. Like along the way, we'll answer the questions. Okay, because I know the last time we did sessions, many of them had questions, many questions, because it wasn't complete. The ones that were leaked, it wasn't complete actually. Okay, like we had more sessions, so only half of them were leaked. So most of them watched half of the sessions, and then they're like, yeah, actually that was good publicity for me because everyone came back to me once again because it was
Yeah.
only half of it. Okay, so I can't help it. Okay, so okay. So now let me show you examples. Okay, let me show you examples. Like right now, why is the market moving up? Breakout structure bullish. Can you see that? This right
Yeah.
here, this drop right here was only a retracement into where? Into the strong low that was created on the 4-hour time frame. Look at this top hunt, breakout structure, strong low. How do we know the low has created the high of the range? Bearish breakout. Can you see that? After you
Yeah.
get this bearish breakout, you know that a range was created from here to here.
Yeah.
Then you know why it is coming down. Why? That is to take out the internal range liquidity, the swing lows. Okay. So within a lower time frame range, what do you look for? Higher time frame point of interest. So on this 4-hour strong low, what's the higher time frame point of interest you had? On the monthly, you had a rejection block.
Yeah.
See that? There we go. You had a rejection block on the monthly. So where did price come into? Came down, took out the internal range liquidity, tapped into the monthly rejection block. Now it is moving up. So now what are we going to do? We're going to buy it until this high gets taken out. Can you understand that? That is what I'm
Yeah.
expecting currently. We're going to buy it until this high gets taken out. Okay, I'll buy it. I'll buy it. Okay. But then again, are you going to wait until they clear out the internal range liquidity and for all that shit to happen? Who knows how long it's going to take, right? No. Once you
Yeah.
identify this breakout structure, once you see this breakout structure, you know that, okay, the 4-hour has confirmed the sells, right, into these areas. Now, with every single London Open or is with Asia, what are you going to do? You're going to sell it. See that? You're going to sell it like that. Sell it, sell it, sell it. But once we get here, we're not going to look for sells anymore. Why? Internal taken out. We are on a strong low that was created on the 4-hour time frame inside of a monthly point of interest. That is when we start looking for buys. Okay, so like that. Can you understand that? Okay, I'll show you more
Yeah.
ranges. Okay, I'll show you more ranges. Like you understand that, right? I hope it is clear. Okay, so look at this one. Even this one. See, stop hunt, breakout structure, strong low. How do we know the high was created? After this breakout structure. See that? Break,
Yeah.
low of the range, high of the range. Maybe this was the internal range liquidity that was taken out, and boom, goes into the external range liquidity. Yeah, same exact thing. Okay, so the only thing